If you want to become a consistently profitable trader, you cannot rely on a set of fancy, expensive indicators to do the job for you. You need to learn to read the price action and analyze the chart as the bars are printing in front of you on the screen. And we are trading, we are not interested in just like any setup that just basically on a chart. We're only interested in high probability setups. We wait for prices come to us and then we act. And the high probability setup is a second entry to like a pullback at the key entry point, or failed second entry against the trend, and a failed breakout, because most breakouts of trading ranges will fail. So this is the price action that I would see for today when I would first come in. And what I can see is that I see a bullish momentum working higher. I see a break and a new extreme of this uptrend. So according to trendline rules, the uptrend played out. As you guys can see, I have all the short-term trend lines on the chart, because after price will break the trend line, traders will attempt to create new extreme. You have a downtrend break, new low. It looks something like this. So I see a spike and I see a consolidating market working sideways. Why this is a consolidating market? EMA is flat and price is swinging up and down, and I have a strong proven key level right here. So as I'm watching this, I'm expecting for price to go from this double top to all the way down here, and this bearish momentum is just indicating just that. But look what happened next. You have a strong bullish move up. So I was proving otherwise. As I'm watching this, okay, I have a strong key level set in play. This is a double top, and this is a breakout out of this, out of this key level. And most breakouts of trading ranges will fail. This is a trading range, and most breakouts of trading ranges will fail. Okay, take a look how you're far away from EMA. EMA acts as a magnet and will pull price closer to it. Now, right now we're looking at the 5-minute chart, and take a look what we have on a 5-minute chart. The structure is clearly a trading range, and we have a strong bullish move up. Okay, I know it feels very uneasy to sell this market after such a strong bullish momentum, but this is how price action reacts, and most breakouts of trading ranges will fail. So this right here is the first high probability setup for today, because price, when you're buying the breakout, you never want to buy during the breakout phase. You want to wait for price to do its pullback and then buy the breakout pullback pattern. Never during the breakout, because most breakouts will pull back at least temporarily. Okay, and as I'm watching this and price is pushing lower, I'm expecting for price still to reach all the way down to here. Now there is a possibility of drawing the uptrend, something like this, and you guys can see I have a new high, first entry long, second entry long. And remember at the beginning of the video I mentioned that the high probability setup is a second entry to like a pullback at the key entry point. You have 3 key entry points. This is a first entry long, second entry long. This could be a high probability setup, but I didn't take it, and I didn't like it at the time. Why? Because I was treating this still as a breakout of this trading range. And a lot of times, traders, you have to trust me on this one, you will just take few ticks higher and then you will turn down. Because remember the 5-minute chart I showed you, there's a clear trading range structure. And look what you have next. Price created a breakout pullback pattern and it pushed higher. But still, this breakout area, this is still strong key level, and this was still looking like a trading range structure, and I was still expecting for price to push down. Okay, this was my first trade for the day that I took, because I wasn't watching the chart particularly this second, and this was the trade that I took, and it pushed lower. And this is what basically was confirming what I was expecting right here. I was expecting just a little push higher and an instant reversal down. It just came a little bit late. Okay, but take a look what you have now next. You have a new high, you have a first entry long, price is pushing below EMA, indicating strong bearish pressure, because EMA is supposed to be holding like here. EMA is not holding here. This lower high is above the EMA, this lower high is below EMA. This is the indication that we are starting to get the downtrend. You have first entry long, pullback, second entry long, and you guys can see this is the second entry long that is above the EMA and is a good setup, and this is the second entry long that is below EMA in a downtrend. You don't have a break and you low like you have right here, and you're coming off to failed breakout. This is a trap, because a lot of traders are going to get trapped here, and this is a good high probability setup for a quick easy scalp. Okay, and take a look as we are coming from this failed breakout. I'm expecting for price to go all the way down to here. This is looking like a strong bearish momentum. I'm expecting, and what is happening? We are pushing strongly above the EMA, and this is the moment where I switch the gears and I say, okay, the breakout analysis played out. We pushed below, we attempted to give the bears the chance, but there's a strong bullish momentum in the market and pushing back above the EMA. This right here basically completely changed the gears for entire today. And take a look at 5-minute chart. You will now see what I was looking for. This is exactly what I was expecting, and I didn't like playing the bullish uptrend, because you have a failed breakout, you broke lower, and there's additional break to the downside. This is exactly what I had in mind, this two-legged pullback into the trading range. And look what happened. Price rejected it. You pushed back above the EMA, above the resistance that now acts as a support. And this is good indication now that I can now be safely looking for longs. Okay, so as the price is pushing higher and I see that we are making higher highs, higher lows, I can see that we are right now working a little bit sideways, something like this. And take a look how nicely it fits off the highs, it fits off the lows. You have to find your channels, not only the shorter term ones, but even the bigger ones, because that's where the high probability setups appear. And you have a two swings right here. You have a third swing that confirmed the trend line, okay, and you have a strong rally off of this trend line. And look what you have. You have a higher low setup. You have a strong push above the EMA. EMA is holding, support is holding, and you're coming off the trend line. This is a high probability setup, even though it's not a second entry or something like that. You're coming off the key entry point and you're heading higher. You're right now in an uptrend, okay? You have a break and a new high of the short-term uptrend. And then you have a first entry short, second entry short failure. And this was tempting to take, but the signal bar is 2 or 3 tick bearish. You're not touching the body, the EMA. You already have a break and a new high. Just didn't feel quite right. If you took a chance here, I don't blame you that you took a chance here, but just it didn't look too good. Whoops, it didn't look too well, and price pulled back there to the very key entry point that was confirmed right here. And this is the new high. This is the first entry long, pull back, second entry long, and take a look. You have a shortened downtrend break, new extreme. So this is I'm going to show you guys visually, two-legged pullback to the key entry point in a strong uptrend. And this is a tiny micro little bullish bar. It is worth taking a chance here on the second entry long at the key entry point. Okay, I know it seems, once again, it seems kind of weird be buying right here when it looks like it's pushing down, but this is how market acts. Okay, this is why it's completely safe to be selling here when you understand the market context. This is a failed breakout, and it's okay to be buying off these lows because you understand the market context. There's a key level. You have everything you've learned in real life, you have to throw out of the window because common sense doesn't work in trading. And this is a high probability setup, and market pushed higher. And look what you have here. Same situation you have right here. You have a strong push coming off key entry point, push back above the EMA. You have a high low setup, big bullish bar, and market is pushing higher. So as I'm watching this, what we are expecting, what do you think we would be expecting? We are in an uptrend, we're above EMA, and high probability setup is what? Second entry long with the trend, so second entry long, or failed second entry short. Okay, just like we were pushing below here, and this is the first entry long, second entry long failure because we're coming off failed breakout in a downtrend. We are in a big uptrend and we're looking for failed second entry short. You have a new low, first entry short, second entry short failure, but you don't get really no clear entry. This is, you cannot go long above this bar unless you're a very advanced trader, and by this time you get this bar, you cannot go long all the way up to here. And once again, you have a new high, first entry long, you're far away from EMA, so you cannot enter here. I'm just watching this sitting on my hands because remember, we don't take any setup just like on the screen. We wait for prices come to us. We wait for prices come to right here and all the way down to here, okay? And you have a first entry long once again, and you're getting very close to the upper trend line. And trend line is just a slanted support or resistance line. It's basically, this is a trading range, and when you're coming from the one side where you're headed, most likely to the other side. So when I'm watching this, I'm not taking any entry right here. I'm just sitting on my hands because I know that it's going to take a lot of time before price will get all the way down to here. Okay, this is the key entry point, and you have a new high, first entry long, pullback, second entry long. So there is a second entry long, but this is a bearish bar. You cannot enter above bearish bar, and you already move all too high. Take a look. A lot of people are scared to buy all the way down here, and they now watch this market go, and they think that now it's time to buy, but you don't want to go long all the way up to here after you're coming from the other side of this trend line, because you're most likely going to get from here to down here. So you don't want to take the second entry long. And look what you have next. You have additional bar, continuation of the second entry, first entry long, second entry long, additional second entry in micro bullish bar. And you know a lot of traders are going to get trapped in. They're going to sucker it in, and you're going to take this nice reversal bar. This is a trap because this now indicates that everybody got trapped. It traded at the very close of the bar to the downside. On my chart, it didn't close below EMA. I wasn't too feeling it because we closed above. If we close below just one tick like other traders have it on the chart, this would be a great trap. And look what it happened. And take a look what you have. You have a break and a new low. So you're working on your second leg down, but you have a first break of this bigger uptrend. And according to trendline rules, after price will break the trendline, traders will attempt to create what? New extreme. So right now, when we see this market pushing lower, we are still expecting for price to create new extreme for this overall uptrend. Okay, so I'm not interested in selling. I'm not interested in selling. This was a very tempting trade because you now confirm the breakout area. This is how price will act. A lot of times they will break out and pull back to the breakout area, but you're not quite touching with the body, and you never know when you're going to make a few more pushes lower. You don't get the push lower. And if you guys take a look, price on a 5-minute chart is strongly working in this uptrend after the breakout pullback pattern got confirmed here. So the overall bias, even on a 5-minute chart, is very bullish. So when I'm watching this, and I have two conflicting beliefs because this move looked fairly bearish and we are expecting a new high, I'm now paying attention to the key entry point, to the EMA. Either there's going to be second entry short below EMA indicating strong bearish pressure, or there is going to be push above the EMA and there's going to be failed second entry short indicating strong bullish pressure. So let's see what we have. We have a first entry short below EMA, okay, confirming the bearish bias, but we're pushing above the EMA. Okay, so the bearish bias is out of the window, and now as we're pushing strongly higher inside of this channel above the EMA, we're looking for a new high because overall context is up. I'm looking for what? High probability setup, failed second entry short, and it happened right here. First entry short, second entry short failure, big bullish bar. You have 3 key entry points: this trend line, this bigger trend line, and the EMA. And this is a gorgeous textbook trap. This was probably the easiest trade for the entire week. And unfortunately, you guys can see there's a gap in between, which means price closed here and instantly gapped over and never looked back. There was not a single tick back and reversed higher. I missed this trade. A lot of traders in Discord, we were taking this trade, missed this trade as well because we just didn't get filled. Few traders got filled here and they enjoyed their profits. But this was a very hard moment to get filled because price just gapped and it never ticked back. Okay, this is one of those few instances where a limit order on a trap, you can miss a few traps on a limit order because trap will generate a lot of momentum. And this is a trap, failed second entry short above the EMA. We're working for a new high. So look what you have. You have a break of this uptrend, tiny. So you're looking for 2 new highs now. You're coming off 2 key entry points, but this is just a first entry. So you have to let this go. Uptrend played out here, but you're still potentially looking for a new extreme. You have a first entry long, pullback, but take a look how the market is starting to consolidate now. You're just going sideways for 10 minutes. EMA is starting to get flat. You have first entry long, second entry long, and to be honest with you, I almost took this trade. I chickened out at the very last minute. Good thing I did because I would have gotten stopped out. But by this time, you have a strong consolidation, and the way you trade this consolidation, you basically don't trade this, okay? Because it's tempting to buy and sell. There is no room, even for a quick scalp. And the only way to trade this consolidation is to fade the breakout. And look what you have. Market is pushing way too down now, okay? Now you don't want to fade this breakout because you're too down. You're way below EMA. You want to fade the breakout if market pushes slightly below EMA right here, and you can look for failed breakout. But market pushes lower. It didn't even trigger higher. And you have but I don't think you want to go short yet because the overall trend is still up overall, because the overall structure is still up. If you take a look on a 5-minute chart, the overall structure is still very bullish. So you don't want to really go short yet. And take a look what is happening. Okay, I'm just going to skip it a little bit to this situation because you have a new low, you have a first entry short, second entry short. And what do you think you want to do now when you're following the rules? To be honest with you, I think you just want to be patient here, because if you take a look, I'm just going to zoom out a little bit for you guys to make it more obvious. You're right now in the middle of nowhere, in the middle of no man's land. This is the support. There is a potential resistance, but it looks like more of a wedge pattern. Okay, take a look how price is starting to head into this wedge. And there is no really clear downtrend, no really clear uptrend. But you know that the downtrend played out. You know that the major bias is bullish, and you have a first entry short, second entry short, failure, you pushed back. If this closed above the EMA, this would have been much better entry. You know what, I'm going to mark it a slightly aggressive entry, but this would have been much better had it closed above the EMA. Below EMA like this, you really want to be careful. But me personally, I know I'm not going to take a trade on Friday, this, when the market is this low in a no man's land, when the market is heading into a wedge. There were too many good patterns to take for me to get chopped into this. But take a look what happens. Once again, EMA is getting flat, wedge pattern is confirmed, you have a new high, first entry long, pullback, a second entry long. Quite tempted, but this is a horrible bearish bar, and by this time you get this bullish bar, your stop has to go below this entire swing. Your stop cannot go below this bullish bar, and it shouldn't even go below this bar. You really have to go below this entire swing. This is still part of one swing, so the stop would be way too big for you to enter somewhere around here, so you have to let it go without you. And the market is starting to resume into an uptrend. Okay, so what I'm going to do, I'm going to take a look at the 5-minute chart, and on the 5-minute chart we are nicely confirming the bullish bias. Take a look, we pushed below and you push back above the EMA, you have a new high, first entry long, second entry long. So on the 5-minute chart, this is starting to look very good. But on a 2000 tick chart, you just get the new high, first entry long, and unfortunately, this is a decent chance to take a trade, to take a chance on, because you have a 2 key entry points and overall bias. You're still waiting for a new extreme. Take a look at this uptrend. This is a major uptrend for the day, and overall, every single pullback was quite bought quite instantly. So the bullish is bias is bullish, but I'm not gonna take a trade in this mess, to be honest with you. And now market is just pushing higher. You have just bunch of first entries. You finally have a new extreme. So what happens after price creates new extreme? You can expect correction or straight up reversal, and price is right now, you have a first entry long, second entry long forming, but you don't want to go long here just yet, because you have this overshoot for this trend line, and you have a new extreme. Plus it's really late on Friday, and it is a tiny little bar, but you'll below EMA, and I think it's better just to wait. Okay, so hopefully you guys understand that you basically don't need indicators. All you need to learn is to analyze the chart, and following the rules, just look for those patterns, look for draw your short-term trend lines, and just follow the failed breakouts of important areas, of trading ranges, of congestions, and look for second entries or failed second entries against the trend. Okay, so I'm gonna wrap it up, and enjoy the weekend. Take care, buddy.